Our housing market is now on the buyer side of a balanced market and will very likely be in a full buyer's market by next month. And behind the deteriorating housing market is the Federal Reserve, continually aggressively raising the rates to fight a 40-year high inflation, which has sent mortgage rates soaring to 20-year highs. This has made housing more expensive, even though home prices have been declining. This has forced many buyers onto the sidelines because they cannot afford a home, and mortgage applications are at their lowest since 1997. The question I get about this almost daily is, how long will this last, and what do I see going into 2023? Now, the first thing we have to talk about is the fact that the Feds will be meeting 2 more times before the end of the year to talk about raising the rate again. And we are already hearing that in their November meeting, they will likely be raising their rate by 75 basis points again. That would be their 4th hike of this year. There is also talk about them raising the rate again in December, but no one really knows what that rate hike will be. The majority are thinking that it's going to be about 50 basis points. Here is the biggest problem with all of these rate hikes when it comes to the housing market and Jerome Powell's comment about trying to make housing more affordable again. The rise in interest rates has actually had more of an effect on people's mortgage payment than when we saw home prices rising and interest rates staying low. Now, I do realize that something needed to happen to stop the runaway train that was our home prices, but I agree with a lot of people out there that believe this happened too late, and we are now paying the price for this. And because of this and the further decline in housing affordability, we are now starting to also see a decline in household formation, meaning that people are moving in with one another. We are seeing more generational households than we have in a long time. All of this just so people can afford where they live. Now, it's not all just mortgages. It's because everything is more expensive. Now, with regards to where this market is headed, let's take a look at this article where they talk to some of the top experts to see what they think and where our market is headed. So let's first take a look at what Jeremy Siegel, Wharton Professor of Finance, said. He said, I expect housing prices to fall 10 to 15%, and the housing prices are accelerating on the downside. He further said, I think we're going to have the second biggest housing price decline since post-World War II period over the next 12 months. That's a very, very significant factor for wealth and for equity in the housing market. Well, I don't disagree that we are going to see our home prices slide, and we have seen our home prices slide. One of the things that's going to maintain our home prices is the fact that our inventory is not shooting up like it did in our last housing crash. So I don't want to tell him that he's wrong by any means, but I just have a sense that we are going to see prices decline, but they're going to reach a ceiling on how much they're going to actually decline, unless, like I've said before, unless we see some massive job loss. So now let's take a look at what Mark Zandi, chief economist of Moody's Analytics, said. It said, buckle in. Assuming rates remain near their current 6.5%, which they're already over that, and the economy skirts a recession, the national house prices will fall almost 10% peak to trough. Most of those declines will happen sooner rather than later, and house prices will fall 20% if there is a typical recession. He goes on to say the housing market is the most interest rate sensitive sector in the economy. It's on the front lines of the fallout from the Fed's effort to bring down inflation. There's going to be coast to coast downturn in the housing market. It's going to be brutal. No part of the market is immune. I don't disagree with what he is saying at all. In fact, we have already seen in the Phoenix market an 8.7% home price decline from May until now. And we have really seen how interest rate sensitive our market is. As soon as we hit that 5% interest rate, we saw a big pullback in our buyer demand, and as it went up. Then we saw it drop right below 5%, and we saw that demand increase. So what he is saying, I completely agree with. The next one is Ian Shepherdson, chief economist of Pantheon Macroeconomics. He believes that home sales hasn't hit the bottom yet, and even buyers who set their sights on lower to cheaper houses will still face bigger mortgage payments. This is purely based on their interest rate. We expect a drop of 15 to 20% over the next year in order to restore the pre-COVID price to income ratio. In short, housing is in a free fall. So far, most of the hit is in sales volumes, but prices are now falling too, and they have a long way to go. In fact, when we look at our prices in the Cromford Market report, we are not seeing a free fall. We are seeing a steady decline, but then we'll see a little blip up again. So we're just in that stability phase still a little bit. I do think we are going to see some decline, but I don't see a free fall. Now let's look at Chen Yao, economic research lead at the real estate brokerage of Redfin. The housing market is going to get worse before it gets better. With inflation still rampant, the Federal Reserve will likely continue hiking interest rates. That means we may not see high mortgage rates, the primary killer of housing demand, decline until early to mid 2022. Now, he is not the only expert that I have heard say they believe that interest rates could come down in early to mid 2023. Now, the big thing to note here is that that time frame is less than a year away. So could we see that? We might be able to. Time will tell on that, and nobody has a crystal ball to really be able to tell you. Now, something to note about all of these experts when they start talking about a recession. Now, if you look back to other recessions, by the time all the experts actually agree that we are in a recession, the reality is that the recession had started a little while earlier. So when they start talking about, we believe that if we hit a recession, we're going to see a 20% decline in prices, part of that 20% has probably already been baked in when the recession actually started. Now, that doesn't mean that it's not going to continue, but it doesn't mean that from the time that they say, yes, we are in a recession, now we're going to see that additional 20% decline. The other thing to note is that usually by the time they all agree again that we are in a recession, that is when our interest rates start to come down. And they usually go down just as fast as they went up. So another thing that I've heard a few experts talk about is that because housing is a lagging indicator, some feel that the Fed could have already overcorrected when it comes to these numbers, but only time will tell on that one. As you can see from all of these experts, everyone is in agreement that our home prices are going to continue to decline. Now, everyone has kind of a different idea on how much they're going to decline, but there is no question that prices will decline. The biggest problem with this, though, as it pertains to the housing market, is that although prices are declining, interest rates are going up, which is not correcting our affordability problem, which is what Jerome Powell said was one of his goals. Even with all of this, I still believe in homeownership. I still believe it is a good thing to strive for and a great goal to have. No, I do not believe that this is the right environment for everyone to be buying in. It's really going to be determined by your circumstances. I feel the same for sellers. If you don't have to sell right now, then don't. If you do need to sell, it is still an okay time to sell. Buyers are still out there. In fact, I tell my sellers, if you really need to sell, I would get your house on the market before the end of the year. In January, early February, it's normal for our seasonal trends to trend up in inventory, which means you're going to have more competition and there's going to be more downward pressure on pricing. And this is all going to be based purely on additional inventory in the market. 2023 is going to be a crazy year in the real estate market. No one knows what direction the interest rates are headed. Some think they're going to come down in early to mid 2023. Some think they're going to stay up all year long. What we do know is that there is buyer demand sitting on the sidelines. So as soon as those interest rates come down, buyers are going to jump back into the market as fast as possible to take advantage of not only the low interest rates, but the fact that the prices have come down. So for now, if you are looking to buy, but the interest rates have priced you out, keep your eyes on those rates. Be ready. Know where you want to be. So when those interest rates drop, you are ready to go. Whatever you do, don't try to time the market. It is impossible. All you can do is make the best decision for you at that time. If you like this video, make sure you take a look at this one. If I can answer any questions for you, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.